Hello, today is Tuesday, the 17th of April, 2012. Let's take a look at the gold and silver market. Starting off within gold, we're on the daily chart. And since it found this bottom within this significant Fibonacci level at 1620, it took 5 days, 5 days, to rally up to 1683, or in the area of it. Obviously, it didn't touch this resistance level, but close enough to a point where it did come towards that level and therefore find an area of resistance. This thing is really starting to head sideways, as we can see this blue band, which is the front weighted 18-period average, now going sideways. If this is a bottom in here, which pretty much looks like a 2/3 retracement from this low and this high, therefore, if it manages to come back up, then, well, basically you create an inverted head and shoulders pattern, which is merely an area where you make a higher low on a successful retracement, because you go from this point to this point. And by making a move up back to the 1683-ish area, could give this thing some momentum to really get going. Overall, the second lower Fibonacci level on the retracement, once you go to the second one from point A to point B, that's what's needed to hold to keep the previous move a successful one. The previous move was going up from 1500 and change up to about 1780, and therefore breaking down below here is more of a bearish thing. Let's move this on to the weekly term time frame, and the Fibonacci retracement levels is from this high and this low. Everything else below that is in an extremely bullish situation, having a sideways consolidation. For point A to point B to be a failed move, for the selling going from the 1900 down to 50 and change, it needs to get above and hold above the second level, which is at 1758. Now, it's broken above it, but it hasn't held above it. This is two situations where it did get above that level, but it didn't hold within that level. And again, making this higher low from point A to point B, sort of like we were showing in the daily time frame, because that's exactly what the Fibonacci is, 61.8. And then having a test of this level increases the chances that you take it out. But breaking it says that this selling, we can say, wasn't real, although it obviously was, and that the bull market can regain its composure. This support level breaking through the next suggested support, or the next expected support level, is roughly in here, and if this level gives in, then you would be adjusting the Fibonacci to, I would say, the 250 lows, and then working within the next levels, which would be roughly 1400 or so, as the next significant level, breaking down below there, and obviously breaking above here. The next resistance level is, in fact, this high. Let's move on now to the silver chart. This is a daily chart, and it's pretty much the exact same thing that I've been talking about before. Significant support here, significant resistance here, and then the break down support levels in here. And if we break out, then you want to calculate 61.8% on the breakout, that is, from this high to this low. But until it stays below this level here, I'm just going to say that this is a sideways mess for now. And then the weekly time frame within this, as I've stated many times before, how big it would be to find this higher low and then really get above this key level here. And for this rally to be successful, the breakout lows are 1774 from the end of August 2010, and this high of almost 50. For it to succeed, it needs to stay above 26. It has thus far done that, and for the selling to be a failed move, which is from this point here to this point in here, it really needs to hold and break above this 39 to 40 range. So far yet that hasn't occurred, and how long we're going to stay in this sort of sideways consolidation, or taking its sweet little time to do things, is pretty much very hard to figure out. Very rarely I'm going to show a very short-term analysis, So this will be one of the rare times. This is a 1 minute chart on the SLV, actually, not the silver, but the SLV. And the high in here at 9:30, this is 9:32 this morning, managed to top, and then it went from about 30.97 down to 30.47 on SLV. So a 50-cent retracement in the first 35 minutes or so of the day. Okay, so that's what, almost a little under 2%. Okay, so the volatility is higher than what we've seen over the last week or two, maybe, but still very low volatility. As far as if you're looking at this on a short-term analysis, the first Fibonacci level did find resistance, pulled back, then it found support, then it found major resistance in here, and now it's breaking above. So right now, as I'm seeing this as of 11:10 a.m. Eastern Time, a very nice looking setup, and that will be it for that. I'm going to finish this off by talking about one thing as far as basically what I consider this of the silver investment. Okay, my writing's a little bit messy. So when I think of the silver investment, I look at that as a goat. Silver investment to me is a goat. If you don't know what I'm talking about, I'll give you a hint. The hint is Gruden, G-R-U-D-E-N, Gruden, rice, goat. Also, if you're still unsure, I'm sure you can take a look at the comments section and see what I mean by that, and I'll talk more about that in the next video. Thank you for tuning in, and have yourself a great day. Bye-bye.